Welcome to TradeTheMBI.com. This is John. This report is for the 21st. Well, this is exactly what we talked about. Below the ABM yellow, short side. We looked for that middle range here of which was a little more than the halfway point between 100% and 76. Still have the ABM green, which is going to be the confluence. That's where you saw the most activity as we got close to it. It attracted buyers, and that's not a surprise. Weakness from the MBI reading, clean, and below the 25, so continued weakness. Shorts starting to get a little more active. They were already activated from our DOC reading. It just became a little bit cleaner as we match with the MBI readings. And this was, that breakdown of the shakeout here in the beginning of the gold fade. Haven't dipped below the red line, so this is by no means dramatic in any way, shape, or form. This is all fairly clean, healthy stuff within the big question mark. NVIDIA is reporting their earnings, and some of the tech move has been, pretty extraordinary. But as we've talked about, some of the relationship between, the market values, inflation, and some of those things, it's distorted in people's minds as to why the market would be going up under weaker fundamentals. And we've had this discussion before. As inflation rises, the market isn't going to take a haircut from a numeric standpoint. So you're going to get an automatic rise there and then adjust within that based on forward-looking earnings. From an NQ standpoint, a bit weaker, already below the 76%. So a little bit more delicate. And I think that you can see here MBI white taking the lead over magenta. That's definitely going to put a lot more pressure, and you can see below the red line. So the big disparity between the S&P and the NASDAQ here. From a reading standpoint, the NASDAQ has been weaker for some time and continues to lead the way. Just as it led the way up, it's leading the way for a little bit of softening. Treasury is just uncertain as to where to go from here. They're sort of stuck in an ambivalence at this particular stage, which is probably healthier because where they were before was just out of line, and getting back within the normalized zone is helpful. Oil right at that peak point here, just below the 80, so just threatening but not quite over the top, but still too high for any kind of relief or expectation. And you're going to hear talk now about the opposite side of the Fed situation. Would they have to increase again? And that would be a stunner for the market. They would not be prepared for that whatsoever. And in a ridiculous move, euro rising again within this idea that the Fed is not doing anything with the Eurozone. They're still far behind as far as rates and everything else. So it's bizarre when they get these pushes, but they try to take advantage of too many positions one direction. And that tries to keep them in that stabilized zone, but it's still way outside of relative economic growth of Eurozone versus the U.S. versus, not to mention quite a few other areas. The whole war conflict has really devastated the Eurozone relative to the U.S. From a trade standpoint, at least. It's definitely lopsided. From a gold standpoint, slow eking is way behind what you see from a crypto setup here. Bitcoin now leveling off, trying to absorb pretty significant gain, and nothing shocking about that. Pretty even here from a DOC standpoint, and that just a little bit of softness. So expect it to play between that 176% for a little bit. ETH has been a little bit better performer. And actually catching up from an overall market standpoint to the value of Bitcoin. We can see from the 50K finally taking that short cover right down there at the bottom, just below the 23 after it hit the 0%. So all of that's pretty congruent. There really isn't anything that's throwing us out of whack here. When we look at it from an intraday standpoint, we got to get caught up with where we are currently in the pre-market. You can see just filling back in some of the kind of chaotic trade that took place during the day. We had some pretty big swings relatively quick to each other, but it was a generally biased lower day. And then as the afternoon came on, it was just enough buying to just kind of level things out to a neutral. And sort of what we're playing in that same range here in the post market at this particular stage. So I think it's just a matter of following what we've got from a reading standpoint. I think there's going to be a lot of excitement about the NVIDIA earnings simply because it just gives a direction as to how much demand is out there. We're already seeing some, indications from people, other reporting that there's softness, but that's been the case for quite some while. And I think that this is what we talked about, it being regional, in each area having disproportional effects, and then it sort of evens out in the broader sense. So we're just going to continue to follow as that goes. But they're going to do everything they can in an inflationary period to try and keep, with the election too coming, modest. And it is difficult because the numbers we know we get from the government these days have been so massaged and everything. It's hard, so we have to look at broader issues, labor participation, things like that, to get a real healthy read as to exactly what's taking place. So that's the long and the short of it. As always, trade well. We'll talk again later. Anything relevant, I will put it on the Skype chat.